The stock of the day is VALE S.A. with ticker symbol VALE. VALE is a diversified metals and mining company based in Brazil. It's actually the world's largest producer of iron ore, fines, and pellets for use in steel making. In addition, VALE produces bauxite, aluminum, gold, and nickel. They also own railroads and ports in Brazil, making them the largest provider of transportation and logistics in Brazil. Here we see the last quote from the New York Stock Exchange Friday for VALE was $24.82. Taking this quote and the latest earnings for VALE, we're able to determine that the price to earnings ratio is a very cheap 7.64, while the 5-year average PE ratio is also an attractive 11.63. The return on invested capital numbers also look very good, with the most recent year coming at 20.7%, while the 5-year average return on invested capital is still an impressive 15.6%. The price to book ratio may be just slightly higher than we would like, but definitely still a reasonable 1.87. In addition, VALE has a strong financial position, as can be derived from this capital to liabilities ratio we see here at 2.14. The current dividend yield for VALE is 2.57%. Considering the highlights presented in this slide, VALE definitely looks like an interesting value stock currently. Here we see the chart for VALE for the last several months. Of course, since January it's gone up just like the general market has, so it was an even better bargain in December. But we're still over 28% away from this level reached here in August, or at the end of July. So there's still could definitely be some room to the upside, also based on the valuation metrics we saw in the previous slide. However, VALE is currently in an overbought position, so there is potential that it could pull back here, of course, but the overall outlook for VALE seems good. The risks, of course, they are dependent on the iron ore and nickel prices, and the slower world economic growth as a result of European debt concerns could impact VALE just as any other stock. However, because of the consistent earnings history, the past performance, and the current low valuation, it's definitely worth considering at least initiating a position at these levels. That sums it up for this edition, and remember to check the blog for the next post. Thanks. Bye.